Hi there, and thanks for joining me for this session of Insurance 101. I'm Cam Rafiee, Assistant Director of Underwriting here at HAI Group. Whether you're brand new to insurance or just looking for a quick refresher, this video will walk you through the foundational concepts you need to understand how insurance works and how we work for you. Let's get started. At HAI Group, we specialize in insurance for public and affordable housing organizations. And while there's a lot that goes into that, the core of what we insure boils down to four main areas. Starting with commercial property. This covers your buildings and physical assets, things like fixtures, systems, and equipment. If something like fire or vandalism causes damage, this is the coverage that helps pay for repairs. Second is commercial general liability. This protects you if someone gets hurt or their property is damaged because of something that happened on your premises or as part of your operations. Third is excess liability, also known as umbrella coverage. This adds an extra layer of protection on top of your primary liability policies, helping you manage larger or unexpected claims. And finally, commercial auto. This covers vehicles owned or used by your organization. Whether it's for maintenance crews or transporting staff, we help protect you on the road. Together, these coverages are designed to protect your property, your people, and your mission. Let's talk about a big insurance concept. It's called indemnity. Simply put, insurance is about making you whole again. If there's a loss, the goal is to get you back to the financial position you were in before that loss happened. We want to restore you and make you whole again. For example, if your building is damaged in a fire, insurance will help you repair the damage and bring you back to the condition you were in before that loss occurred. It gets you back to where you were. Now that we've covered the basics, let's look at how a policy is structured. You'll often hear us refer to something called DICE, an acronym that helps break down the five main parts of an insurance policy. Starting with the declarations. Really, this is the who, what, when, and where of your policy. The second is the insuring agreement. What's covered and for how long? The third is the conditions. That's the responsibilities of both you, the insured, and us, the insurer. Then there's the exclusions. That's what's not covered on the policy. And finally, your endorsements. Those are any add-ons that could expand or even limit coverage. Understanding these five sections gives you a better handle on what your policy does and does not cover. Let's dig into three foundational insurance terms: exposure, peril, and loss. Exposure refers to what's at risk. It could be your building, your vehicles, your staff, or even your location. The more exposure, the more potential there is for a loss. And that's something we take into account when setting coverage and pricing. Peril is the thing that causes the loss. If a fire damages your building, the peril is fire. If hail dents your car, the peril is hail. If lightning fries your electronics, the peril is lightning. Simple as that. And finally, loss. Loss is the result of the peril. Losses can be direct, like damages to a roof from a windstorm, or indirect, like lost rental income while the property is being repaired. Understanding this trio, exposure, peril, and loss, helps you see how we evaluate risk and structure your coverage and set your rates. Next, let's talk a little about hazards, because not all risks are created equal. Here's an easy way to think about hazards. They don't directly cause a loss, but they make one more likely. Like when I tell my son to stop climbing a wall before he hurts himself, it's not that the wall caused an injury, but his actions increase the chances of something going wrong. We break hazards into three types. Physical hazards. These are things you can see. A wet floor is a great example. It increases the chance someone will slip and fall. There's moral hazards. These relate to character. Dishonesty is a moral hazard. Someone might lie on an insurance application or exaggerate a loss. And there's morale hazards. These are about carelessness. Leaving a car running and unlocked while running into a store increases risk, even if it's unintentional. Recognizing hazards helps us and you build better safety practices and also help reduce claims. When we insure property, we're typically covering real property, which is your buildings and permanent structures. Also, what we call your business personal property, or BPP, which is things like furniture, appliances, tools, really the movable stuff. Then there's business income, the revenue your property generates. If that income stops because of a loss, we're here to help cover the gap. And the extra expense, those are the unexpected costs that come up while staying operational, like renting temporary office space. The goal is to keep you up and running with minimal disruption. Moving on to casualty insurance, that covers you when someone else is injured or suffers damage and you're found legally responsible. In insurance speak, the first party is you, the insured. The second party is us, the insurer. And the third party is the one making a claim against you. Casualty coverage is known as third-party coverage. It also includes things like general liability, auto liability, and excess casualty as well. Within casualty coverage, here are the common types of losses. There's bodily injury. That's when someone gets hurt, like a visitor slipping on an icy walkway. There's property damage. Something gets damaged, like a company vehicle hitting a parked car. And personal injury. That's the non-physical harm, such as slander or libel. Before we wrap up, let's talk about limits, because whether it's property or liability coverage, understanding your policy limits is key. A limit is simply the maximum amount your policy will pay for a covered loss. Let's say your property limit is $500,000. If a fire causes $600,000 in damage, your policy will only pay up to $500,000 minus any deductibles. The rest would be your responsibility. On the liability side, you might see $1 million per occurrence, $2 million aggregate. That simply means up to $1 million can be paid out for a single incident, also known as per occurrence, and no more than $2 million can be paid out total during the policy period. Choosing the right limits helps you avoid being underinsured when it matters most for you and your organization. Now let's talk about how our underwriting team supports your organization behind the scenes. When a new risk comes in, our job is to determine if it fits within our appetite. We look at things like construction. What's the building made of? Occupancy. How is the property being used? Protection. Are there sprinklers, alarms, emergency access? And exposure. What's surrounding the property that could present additional risk? We also work closely with risk control. They help verify that the building is in good condition and that safety measures are in place. We lean on their expertise. What are some things that we as underwriters review? We're going to look at past losses and certain contracts as well, to make sure both HAI Group and your organization are protected. Oh, and we also look at applications. These documents have basic underwriting questions that really just help us understand your risk and your organization. It could lead to further underwriting questions, but the applications give the underwriter a good baseline of what your organization is all about. It's really all part of making informed decisions to serve you better. And that wraps up our Insurance 101 session. I hope this helped clarify how insurance works, what we look at behind the scenes, and how we structure your coverage to protect what matters most. If you have any questions, please reach out to your HAI Group account executive. We're always happy to help. Thanks again for watching, and thank you for choosing HAI Group.